Hello everyone. Very good morning to all of you. Welcome to the Offices Adda 24/7, the special session of your BRBL subject in the English medium language. Those candidates who are new in this session, do not forget to like and subscribe the channel of Officer Adda so that the notification of all the YouTube session will be automatically come in your mobile. These YT sessions are very important because to just boost up your confidence, these YT sessions are important. Suppose if you enroll in any paid batch, so in any paid batch you can easily get the live classes, okay, according to your time, that is morning and evening. Then if you suppose you just miss the live classes, then you can see the recorded session also. In that paid batch you will also get the mock paper. So one batch is a sufficient to crack your exam. So one paid batch, YT session, and the third one is confidence. If you have a three things, you will absolutely crack this exam, that is CAIIB 2023. Good morning, Debashish sir, how are you? Okay, now 81% discount is going on. So suppose if you want to enroll in the new selection batch, you have to apply this code, that is Y391. Okay, now let's start with the session. So yesterday we have just started a series, that is summary of the act and exam oriented question. So in yesterday's session we have just completed the Indian contract summary and its question. Okay, so today we are going to start a new thing, that is contract of indemnity, and then after we will do the contract of guarantee. Okay, so what exactly the contract of guarantee? So this is the crux that is given here. So contract of indemnity is nothing, okay, but it is basically the loss will be happen to one person, and the protection of loss is, what is this? Protection of loss is done by the another person. So this is the basic criteria of contract of indemnity. Okay, now see here, the contract of indemnity is entered into when the party apprehends a loss in a particular contract and want itself to be covered from the losses it may incur. That is called contract of indemnity. So all the insurance example comes under the contract of indemnity except the life insurance. Suppose if I give you the one example of health insurance. So in health insurance, suppose if X person is paying premium to the Y company. Y is the company, that is a health insurance company. So in that case, what is a promise? What is a contract between X and Y? If X person have, X person suffered any accident or etc., in that case the company will pay the this loss. This is called contract of indemnity. But the life insurance will not cover, because in life insurance the one party is dead. So if one party is dead, in that case the money will be available to the next year or the nominee which is mentioned in the insurance. But this is not happen in the other insurance, just like education or any your car insurance, etc. Okay, so the contract of indemnity, there is a loss and there is a protection of loss. Okay, the person who suffered from loss, that person is called indemnity holder, and who protect the loss, PL is who protect the loss, that is called indemnifier. Okay, indemnifier. Done. So this is the parties in contract of indemnity. Now see what is written here, that the contract of indemnity may be express or implied. Exactly. Express means basically, that is express, written and oral, or implied means by the way of act and conduct. So we can just write it here. Okay, we can just write it that implied means by the way of act and conduct. Okay, and express means written or oral. This is called contract of indemnity, a basic definition. Okay, now see what is written here, that a contract of indemnity, the liability of an indemnifier is stand alone primarily obligation. Exactly, the primarily indemnifier is liable because he is doing promise now, so he is first liable. It is independent from and not contingent on any other party's liability to the indemnified party. Exactly. It is independent one. It means if the loss will happen to the indemnity holder, then only indemnifier will come into picture. Okay, not contingent on any other's party liability. It means if other party will, suppose if the damage will happen to the other party, in that case indemnifier will not come into picture. But in the case of indemnity, the loss has happened to that party, so there should be a link between indemnifier or indemnity holder. So then only the indemnifier is liable. The principle of coextensiveness does not apply to the indemnity. What is coextensiveness? Does not apply to indemnity. It means it will not go on a parallel side. The contract of indemnity, that will not go on the parallel side. So this is your last statement. The principle of coextensiveness does not apply to the indemnity. So a simple and a short quick revision, that the loss will happen to one party and the protection of loss happen to the another party. So this is your definition of contract of indemnity. Now the indemnifier will remain liable under indemnity in relation to a loss under the contract even underlying contract is void and unenforceable. That is so simple. Indemnifier means the person who is there for the protection of loss. So indemnifier will remain liable under the contract of indemnity if the loss occurred under the contract, even if underlying contract, even if the contract is void. Suppose the contract between indemnity holder and indemnifier is void or unenforceable, still this is liable for act. This is what this statement. Kuratha ma'am, co-extensiveness means, it's a collateral, just like ma'am. In the contract of guarantee, Kuratha ma'am, the liability of the guarantor and the principal debtor is collateral, co-extensive. It will be done in the same direction. But in the contract of guarantee, ma'am, the principal debtor is first liable and then after the guarantor. So same thing will not apply in the contract of indemnity, ma'am. This is called co-extensiveness. Okay, great. Now the bank, in order to isolate themselves from any adverse development or consequential loss at a later date, obtain indemnity while issuing the duplicate demand draft fixed deposit rupees permitting operation in the current account of partnership. So in that case, this is all about your bank, that the bank, in order to isolate themselves from any adverse development and consequential loss at a later date, obtain indemnity while issuing the duplicate. Okay. So in that case, class, this is all about your bank. Suppose in bank, if any person want a duplicate demand draft, fixed deposit receipt, etc. So in that case, permitting the operation current account of partnership. So in that case, the bank will deposit the indemnity bond. You are the bankers, you well know this criteria. Okay, suppose if Nikita ma'am is demanding the duplicate demand draft, duplicate fixed deposit receipt, so in that case I have to fill the indemnity bond here. Then only the bank will issue these things. Is that okay? Okay, now the contract of guarantee. What exactly the contract of guarantee? Because in today's session we are going to complete the contract of indemnity and contract of guarantee, and then after we will do the questions of both the terms. Okay, now if you are new in this session, do not forget to like the session and subscribe the channel. And your new selection batch of CAIIB, that is for the June exam 2023, is already started. That batch is in a very detailed form. So if you want to enroll, you have to apply the coupon code Y391, because that batch is in English and in bilingual language. Okay, now what is contract of guarantee? A very simple definition. Principal debtor is there, creditor is there, or surety or guarantor is there. So the contract of guarantee is a contract to perform the promise or discharge the liability of a third person in the case of default. It means if the principal debtor will come in the default form, in that case, the guarantor will pay the money on the behalf of the principal debtor. This is called contract of guarantee. Okay, this is called contract of guarantee. The provision of Contract Act, what is this? The provision of Contract Act are also applicable to the guarantees which is given by bank. Okay, the bank also sometime called as the guarantor. The bank sometime also called as the guarantor. So if we just discuss about the types of bank guarantee, so performance guarantee is there, financial guarantee is there, and deferred payment guarantee is there. Three types of guarantee that we have already learned in the LREB subject also. Performance guarantee means suppose Nikita ma'am have to perform any project. For that performance, the bank have given guarantee to the third party. Financial guarantee, suppose Nikita ma'am have to pay 10 lakh rupees as a tax. So in that case, the bank is my guarantor. Deferred payment in the installment. Suppose I have to give 1 crore rupees in the installment to the third party. In that case, the bank will be act as a guarantor to me of each installment. So these are the types of bank guarantee. Exactly, Devashi sir. Okay? Exactly. Now in the third statement, bank generally obtain guarantee as form of collateral of a debt. Exactly. Suppose I have taken 10 lakh rupees. So if the guarantee is given by me to the bank, so it should be collateral. Collateral means the price of the loan and the price of the security will be exactly same. All these are example of contract of guarantee and are bound by the rules that is laid down in the Indian Contract Act. A very simple definition of that one. Okay, now let's move toward the questions. Okay, now we will do the question. Now tell me class, insurance policies are contract which are in the nature of what? Guarantee, pledge, bailment, indemnity. Tell me class, insurance policies are the contract which are in the nature of what? Tell me, a very good question. Insurance policies are contract which are in the nature of, that is indemnity. Why so much late? That is contract of indemnity. All the insurance policies comes under the contract of indemnity. Okay, tell me class, how many parties? The second question, how many parties are there in the contract of indemnity? Tell me. How many parties are there in the contract of indemnity? 2, 3, 4, 5. So there are class two parties in the contract of indemnity. The indemnifier holder or indemnified. The parties is indemnity holder or indemnifier. Okay. Now tell me which of the following statement is true and false. Okay. And please give me answer. A person, what is this? A person who is indemnified can recover damages as well as cost for claiming the damages. That is true or wrong? Tell me. Yes, class. That's great. The person who is indemnified can recover damages as well as costs for claiming the damages. That is absolutely true, because indemnity holder or indemnity holder is also called indemnified. Okay, indemnifier is the person who is the promisor, but promisee we will also call indemnity holder or indemnified. So the person who is indemnified can recover damages as well as clause, yes. Okay, three things he can be demand in, in your LRB subject. Section 125 was asked, that is right of indemnity holder. So the cost, damages, okay, cost, damages, and the next one is your sums. Okay, now where notice has to be given to the indemnifier as per terms of indemnity, the indemnity holder has abide by it is entitled to the claim. Second question. And those candidates who are new in this session, do not forget to like the session and subscribe the channel of Adda 24/7. Where notice has to be given to the indemnifier as the terms of indemnity, the indemnity holder has to abide by it, entitled to claim. Exactly, the indemnity holder is absolutely entitled to claim. So the right answer is true. Okay, in the indemnity, the promisee is indemnifier. Promisee. Promisee is indemnifier or promisor is indemnifier? So the last statement is, that is totally false, because promisee is indemnity holder and indemnified. Both are same person. But promisor is indemnifier. Okay. Now, next one. Again class true and false, and just write the answer like that. Okay. Now tell me that in the contract of indemnity, the indemnifier is primarily liable. First one. In contract of indemnity, the indemnifier is primarily liable. These questions are very, very much important. The statement is absolutely true. Okay, the contract of guarantee, the liability of surety is secondary. The liability of surety is secondary. Absolutely, because the primary liability is of principal debtor. Okay, anything done for the benefit of principal debtor is the sufficient consideration to the surety for giving the guarantee. Suppose the guarantor is giving guarantee on the behalf of principal debtor. So for that guarantee, the guarantor will demand anything from the principal debtor. So the answer will be absolutely true, because no need to demand for any extra consideration. The way he is doing or he is helping the principal debtor, that is sufficient consideration. Where there are co-surety released by the creditor, one of them does not discharge the other. Co-surety means principal debtor, creditor, surety 1, surety 2, surety 3 is there. Three sureties are supposed there. So a release by the, there are co-surety, a release by the creditor, one of them. Suppose the principal debtor discharge surety 1. So does not discharge the others. D. If one party is discharged, that is one co-surety is discharged, so in that case the other will not discharge. So this is also a true statement. Exactly, this is also a true statement. Good. Principal debtor need not pay the surety after the surety has paid the amount to the creditor. Acha. E point class. E point is very, very good question. Tell me. Suppose in the contract of this principal debtor, surety or creditor, suppose the surety have paid to the principal debtor, so the surety will not demand money from the principal debtor. The last one is, that is totally false. Baba, if the principal debtor, creditor, surety, if the surety have given money to the creditor, In that case, surety will demand money from the principal debtor plus interest also. So that statement is false. And all statements are true here. Excellent. Now, these things. After that, the indemnity and guarantee will be finished. Okay? Devashi sir, Kuradha ma'am, Anu ma'am. Okay? Priyanka ma'am. So, these sessions are very, very much important. It is just a quick revision, ma'am and sir. Summary of the act and the questions. Surety is also known as what? Surety is class also known as what? Tell me. Surety is also known as? Exactly, Priyanka ma'am. Good. Surety is also known as the guarantor. Excellent, ma'am. Excellent. Guarantor. Okay, good. Liability of the surety is dash that of principal debtor, coextensive with primarily to secondarily to. That that these three words are written in the section also. There is a separate section of B point. Liability of the surety is dash that of the principal debtor. Just remember this word. That coextensive word is written in your this one book, not secondary. Priyanka ma'am, just listen. Secondary is, when the question will be just like when the principal debtor is not, the principal debtor liability is primarily, then after that is secondary. Exactly. But ma'am, this word is now written in the book. So we have to follow that word, ma'am and sir. You can say coextensive, that is written in the bare act of your Indian contract. That's why I'm just highlighting this word so that you can easily understand. If there is an option of coextensive, primarily, secondary, you have to tick mark on the coextensive, ma'am and sir. This question is very, very much important. This question is very, very much important, class. Okay, because this word is written, Kuradha ma'am. Okay, that's great. The guarantee which extend to the series of transaction is called series of transaction. Excellent. That is continuing guarantee. First of all, tell me, sir and ma'am, B point is clear or not? B point is clear or not? Tell me. Surety is dash if the principal debtor is released by creditor. The surety is excellent. The surety is discharged. Discharge if the principal debtor is released by creditor. Guarantee obtained by dash is invalid. Guarantee obtained by consent is valid. Agreement is valid. Contract is valid. Then what is left behind it? Exactly. E point is guarantee obtained by misrepresentation is totally invalid, because misrepresentation is not comes under the essential points of the valid contract. That's it. Excellent performance, class. Keep it up. So just stick it in a positive way that yesterday I have done the contract, today I have done the summary of indemnity and summary of guarantee. That's it. Good. Kuradha ma'am, this B point is basically, ma'am, see, suppose in any act, whatever the word that is written, we have to follow that word, na ma'am. So in the B point, ma'am, the surety is coextensive that of principal debtor. That word is written, ma'am. So that's why we have to tick mark on the coextensive. That's it. Okay. So this is all for today's class. This is your new selection batch, which is already started from yesterday. Okay, so apply the coupon code, that is Y391, for the maximum discount up to 81%. In this batch, you are getting everything, but not elective paper video courses. For the elective paper video courses, I think you people have done the CAIIB registration. In the CAIIB registration, you have already selected the one elective paper. So you can just purchase that elective paper as a video courses. Okay, so apply this coupon code. And if you want to enroll in the CAIIB Kamaha pack, because right now we will also launch the revision batch, crash course, numerical batch, case study batch. So if you want to enroll it, just use this code Y391. Thank you so much for attending the session.